April 19, 2020. We're going to take a look here at the markets, what occurred over the past week, what we noticed coming down the pipeline this week. How can we leverage that information and try to make some money here? And so last week was pretty interesting. We did have some pretty nice plays that we called out from Game Plan Sunday and also on the website. In particular, Netflix was a real good play. So we had Netflix, we had Amazon. These companies hit record highs. And so that is very interesting when you have, stock market going through at, the beginning phase of a recession or depression, or I call it the greater depression to come. And these companies are going berserk, right? As far as the stocks are, the stock market isn't moving with the economy. Okay. So that makes the environment very, very treacherous. It makes it very, very tricky to try to navigate when you have, terrible, weak economic data, but the stock market is rallying, doing the total opposite. Now, a lot of reason why the markets, the move that you're getting in the markets is coming from the fact that the Feds is printing this money, over $20 trillion of monies, and Wall Street is excited about that. Meanwhile, the economic data is just horrendous. Last week we had over 22 million people that lost their jobs, over 22 million people out of work, so every week, millions of people are losing their source of income, their livelihoods, everything. It's a nightmare. Stock market is rallying, making its new highs. Not the entire market, but you got certain stocks like we just called out. The key thing is to understand is that the way that the economy is moving, that's big picture, long term. It's going to take time for this thing to play out. I showed you guys last week when we talked about, and I'm showing you guys all the different recessions, how long it took for us to get through all those recessions, right? At least 2 to 3 years on average, it took us to get through those recessions. And so the fact that people are believing that this is going to go away this week is just comical at best. This is going to continue to get worse. And so you just have to keep in mind that, the long-term picture is going to be bad. The trend has turned around. For the short term, there's opportunities that's available for traders. So for us traders, we can get in and seize the day, as the markets are very volatile right now and will continue to be volatile. And so, different folks, different strokes for different folks, right? So if you have like a long-term portfolio, things like that, you got to play it different from somebody who's trading, right? So just gonna pull that up here. There we go. All right. So cool. So, but there was some money, that was made last week, right? But overall, the news continues to be bad. We had earnings that come out with the banks, which, is terrible. We had Wells Fargo, JP Morgan. They're finally calling for a recession. They're calling for a deep recession, right? I mean, depression, deep recession, whatever you want to call it. But when the banks are calling for it, that it's coming. I think that what we're dealing with right now is that most people are trying to stay positive because there's so much negative information that, it can have negative impacts on the psychology of people. And remember, economics is all about psychology. It's not about the money, really. It's really about psychology, how to get people to behave and how to stimulate people to do what you need for them to do. And so I think that what we're dealing with right now is very, very, very crazy. Okay. The reason why I say it's crazy is because last week we had on the political side, I know we had Donald Trump, who took his funding from the World Health Organization, WHO. There's been a lot of videos surfacing the web about, Bill Gates and this organization, Fauci and all these guys. And interesting to see that Trump, moved against that, which, I can't really figure out what's that all about. But what you're seeing is a lot of distrust. So you got distrust from the people in government. That's interesting because the people don't know who to believe. One scenario, you're saying that people got the COVID situation from eating bat soup in China, eating bat soup, right? Then they said it was an anteater. Now they're saying that it's man-made. Nobody knows. So now you got, people that's out here, trying to seek the truth. People want to know the truth, but obviously we're not going to get the truth. It's going to keep on telling lies on top of lies. And what does that? What happens with that? That causes dissension with the people and the government, because then you don't know who to trust, right? And then you have health, medical professionals that's coming out, doctors, people that's not some just regular people. We're talking about people with PhDs off on top of PhDs that's coming out and basically speaking against what the narrative is. So you have a lot of division in that. And then last week we see Trump break from WHO. So that was like interesting turn because, you would think that they was all together, but I think that causes other issues more probably on the political side because it's going to be used. All these things are going to be used for the election. You got to remember the risk that's still ahead is the election in November 2020. And Biden is at the lead. We have Bernie, he turned the torch over to him. Basically, or they stole it from him, however you want to word it. But yeah, you got Biden, you got Trump, and the Democrats, they're going to be taking everything they can to try to bury Trump, of course. Trump is going to try to, leverage whatever he has and what he can to try to turn it into a victory. So the whole key thing for Trump is to keep the people positive as possible. One of those things is, again, sending out these stimulus checks. Last week, people just started getting their stimulus checks. Trump came out and talking about how he wants his name on the check. So he's actually getting his name on the check. So people getting paper checks, they will have Trump's name on it. That is all political, basically, you see his name on that check when it's come time for election season. You say, you're going to recognize that he the one who did it. That's the purpose, so that you can remember him. In your time of need, I helped you out, right? That's the whole purpose. And so, election time, I want that vote. So, you got all these different elements that's playing, right? But never lose sight of the big picture, and then the smaller, moves are going to play inside the big move. So the big move, big move is coming down. The micro move is going to be volatile. It's going to be ups and downs within that. So traders, again, we can leverage, on those, micro moves in this thing, but don't lose sight of the big term trend. The big term trend is down. Okay. So this thing is coming down, and it's going to come down because the economy itself, the economic factors are coming down. So right now we have the S&P 500 that's up right now. Let me spread this out just a tad bit. If you guys on the YouTube side, definitely join the live chat room so you can get the full screen. If not, you can catch the replay. Okay. So this is the move here. We came to this floor, move up, and this is where we are now. So the market is trying to definitely come up to this 100 moving average, 2,900. The 200 moving average I got at 3,000. Right, so pretty much at 3,000. So this is what I'm looking at here for this week. Right now, the markets are slightly down, but it doesn't mean it's going to be down for the week. Ideally, you'll want to see this thing come up here and tag this 100 moving average before you start shorting. We'll see. However, it is extended. So we're in an overbought territory, okay? That means that everything is too expensive. It's too high. It needs to come down, right? We got some momentum that's starting to short here. Momentum starting to turn over here. But at the beginning of the week, we might see this push up a little more. I'm not too sure what that could be. We do understand that Trump is trying to open the economy back up. So I believe this week coming up, that could be the positive news that can, try to stimulate people to try to push this thing a little further. But I don't think that we'll get past this 200 moving average up here. All right. So that's the whole thing. This is a resistance up ahead. And then this is the key resistance up ahead. So this one here, we're definitely going to pay attention up here. And the crazy thing is the sentiment is, short. We already have a lot of people that's short. So when you have too many shorts, the market likes to, drop the anvil on their head and rip it from them, right? And shake the confidence. And so one of the moves that we may see is that because people are short right now, this thing may push up to this first 100 moving average. And then you'll start to get more shorts. And then they'll try to rip it from them. And then they'll go to this 200 moving average. If it gets to the 200. So if it gets to this 200 moving average, that's extremely short, extremely overbought, right? Because it's in this zone here, out of bounds. And so that's definitely a key short signal there. And so the move should be similar to this, all right? That's what the big move should be, all right? So that's with the ES. We take a look at the NASDAQ. They're extremely overbought. Okay, let me just open this up just a tad bit so y'all can see that. All right. You see those oversold, overbought territories right here. All right, so this line here, we're way up here. So the tech stocks, we got the nice move last week here, um, and I think they hit their targets. Now it's time for them to come back down. All right, so right up here at the top, I believe that they need to come down. You know, don't know how far they're going to come down, but they definitely need to come down some more. They're overbought right now. So whoever's buying at these highs are out of their mind. We saw Amazon. Let me just take a look at Amazon real quick. Right. So we take a look at Amazon, right? And I mean, look at this. Look at this chart, right? I mean, that was that was an inverse head and shoulder. So that was a pattern, right? You can see, that was the shoulders, and that was the head right there. It was inverse head and shoulders, bullish setup, which we already talked about this past 2 weeks, and it made its move. It hit its objectives, and it's way out here. New record, new high. But who wants to buy up at these highs? I mean, I understand that Amazon is going to be one of the companies that's going to survive this thing, but it's still overvalued in my personal opinion. Okay. Um, Amazon, they just, all these people that's, laying off, Amazon just hired I think 100,000 people. So Amazon is actually hiring, which is crazy. Well, I guess not crazy because, you got people that's still ordering things, and the mindset of the people, the psychology of the people are shifting from, trying to adapt. To the human spirit likes to try to adapt. That's what we try to do. So everything's shut down. So people are trying to adapt. You still need the things that you need. So people who normally wouldn't shop online are now starting to shop online. That business, excuse me, that business is going to Amazon, right? And so Amazon, have a higher demand, well, I should say unnatural demand. Otherwise, they wouldn't have, and so therefore they need to hire more people to help them with that. Now, the quality of jobs that they have doesn't mean they're good quality jobs. That's another thing. A lot of those jobs are temporary jobs or part-time jobs because you got people that's trying to survive, and so people gonna take the opportunity. Amazon's hiring, go get a job so you can get some money, right? Because that's the psychology of people right now. You need money. But that's interesting. It made this nice move last week, overbought territory. Um, I don't think that it's going to go higher than this. I mean, it could. We have seen times where the markets, just do crazy stuff, but it's overbought. Who's buying at these highs? You got to be out your mind. You should have been buying here, right? You sell up here at the highs. So I don't know who's buying up at these highs, but right now it's time for this thing to take a breather. And I think that's what we're seeing a lot of the move in the NASDAQ coming up this week that'll come from that. Let's see. Do you think earnings coming out will take down indexes from what we've seen so far? They are as bad as predicted. This crazy thing. Good question, Dustin. Normally earnings takes a blow, on certain stocks, right? It could be the slightest, debacle in the company, and the shareholders in the markets will just sell off crazy. And then other times we've seen where the markets will rally, and it's not even any good news. So it's just crazy right now. Right now, I think the level of uncertainty is so high that it's, nobody can predict it. Nobody can, make a projection. Nobody has a model that can work right now. Everything is being reset right now. And so, when we build financial models, we build these models based off of assumptions. We have, data, historical data and things like that, but then we also have to make assumptions. Some of those assumptions that we don't know is the company's future earnings, okay? Their ability to generate free cash flow in the future for its investors. Nobody knows this right now. And so it's all speculation. Just understand that the tide is coming down. When we take a look at the big markets, it's coming down, and it's going to continue to come down. And so that's why I was telling people that, hey, right now, even if you get in on some cheap stocks, that doesn't mean those stocks are going to be in business a year from now. They shut down. You're going to lose all your money. So it's a big wait and see game right now. A lot of the big boys, trying to get out of the markets right now. That's why you got all this selling pressure. They're trying to get out, but they're too big to offload their positions all at once. They had to take it in chunks, to try to get out. And we've seen a lot of hedge funds, getting their, asses whipped right now. So, which is interesting. As retail traders, we don't have so much to move, but we can see what's happening and we can react, respond towards those moves, if necessary. So, I want to show you guys something real quick. Um, let me see. Let me just actually go over gold real quick because gold has also tapped out up here at this resistance level, right? So it hits the Fibonacci level perfectly, and then it starts to retrace. So it's coming back down now. How far would gold come back down? Well, that's the first level right here. So you say around the 1650 level, 1680, 1650, it'd be these zones. And then down here to the 50 will be a good place. If gold comes down in even further, then be looking to re-up around this level if it comes down any further. I don't really know what it's going to do, but the trend looked like it's, again, coming over. So that's my direction on it. The same thing with silver as well, is that they're going to come down. And so that means that there's going to be future opportunities to get in. So if you missed the last wave, then you can get in on the next one. So, I mean, this is just like, it's just coming down. We got momentum, again, shifting. We have the overbought territory, so it's got to let it come down. And that's silver, okay? Gold and silver. Bonds, let's take a look here at TLT for the bonds situation. Bonds is entering to a squeeze. I think bonds is going to be a real tricky scenario for us here to see how that plays out. Excuse me. Let's see how bonds are going to play out. I mean, who in the world is buying these bonds right now? The Feds. So it's entering to a squeeze right now. Don't have a move yet. The trend is positive, so bullish is the direction on here, but it is a tad bit over. So we got some mixed signals, right? So we got some, the long term, the short term, all mixed up in here. And so, bonds don't really know right now, but we'll have to see how this is going to play out. I think more interestingly is the dollar. So the dollar, in fact, let me I'm gonna give you guys a side-by-side chart. Let's just take a look at this real quick. I'm gonna switch this over real quick. All right, so it's been a minute since I took a look at this one here. Basically what we want to do is take a comparison of the US dollar. I think that this is going to be key for what we need to be focusing on. The move in this dollar, okay? I think it's going to be interesting. All right. So as you guys can see, as I move side by side. All right. Let me just take that off real quick. Okay. So when the dollar was rising, right? Let's see. So this was coming down. Okay, so when the dollar started rising, gold started going down. All right, so gold started going up, dollar started going down. If you can't see that move, look at it here. Dollar started rising, gold started going down. Okay. Dollar started coming down, gold started going up. Okay. And now it's interesting. We got a buy trigger here. Looks like, this may be a flag. I guess you guys can see that flag there. And this can be a bullish pattern. It can be. Okay. And this goes up, then again, we see that gold will come down. So I think that's going to be interesting to watch. Also, let's actually take a look at side by side the ES, S&P 500. Let's take a look at it in the same breath. All right, so everything was coming down together here. But once the dollar started to go up, the US S&P 500 stock started going down. Then once the dollar started shifting, we started seeing the markets shift the opposite direction. So let me just that out here real quick. So when we start seeing that go up, that's when we got this move further down at that floor. And then the dollar starts to come down, and then we get the markets to come up. Okay, so if this is a flag and it comes up, then I think that's bad news for S&P 500 for stocks. So I think this is crucial. This is what I'm gonna be paying attention to, is seeing how this dollar moves, this currency over here. We got countries that's in trouble, and strapped. They're trying to get those dollars, get the US dollars They got lots of debt to pay out. Our world markets are intertwined. So a lot of this macro look at things. It's a lot for one person to take a look at. That's why you have a lot of research, analyst teams. They have teams that take a look at all these different parts because they all play out together. But I think that's going to be critical for going into this week. And I just think it's going to be a choppy week. I think it's going to be a choppy week. Right now we're already starting down, but we got to see how this thing is going to play out. So I think on the positive side, what people are looking for is to open the economy back up. And it can play either way, right? Trump and them open up the economy and more people get infected. I mean, that's his ass. He out of here. He might as well cancel Christmas. So I think he's taking a huge risk by doing so. But at the same time, you got people that's feeling on lockdown, and people want to exercise their liberties. The government shouldn't be forcing citizens what to do. The government's supposed to be run by the citizens. So you got a lot of tension in here. So I think that the volatility is just going to continue to increase. It's a lot of uncertainty in here, so it's hard to really calculate a lot of these things. But I wanted to show you guys these two charts side by side because I think that's going to be critical. Let me go back to my other loadout. Anybody got any questions on anything that we just went over, or you got any stocks, anything you want to take a look at? Yeah, as I was just discussing earlier, how this financial sector is like interesting because a lot of these insurance companies and banks, they make their money off of interest rates, right? And so interest rates are at zero. So that means that the money that they make from their customers, they can't generate no interest off of. And you factor in inflation, that means that they're negative. So a lot of those companies, they cannot make any money right now. So financials is a terrible place to be in right now. They can't make any money from interest rates. Plus, on top of that, earlier we were just talking about weather. Weather also impacts the markets as well. And right now we're seeing some crazy weather right now. Last week, coming off the week, I couldn't even sleep on Sunday, right? We had tornadoes and all kind of stuff that we naturally normally don't have. But just think about the, catastrophic losses that's, involved with those things. And these insurance companies got to cover it. But think about it. A lot of them are shut down and can't make any money right now. Even the citizens don't even have the money to pay the premiums. And so where the insurance companies getting the money from to pay out these claims? And these claims are going to rack up to the millions, maybe even billions of dollars. And I just can't see a positive outcome of that, with these insurance companies and these banks. They're getting hit, negative double whammies on both sides. They're not collecting premium. That's a triple whammy because they're not collecting premium. They're not turning profit from investments because interest rates are at zero. And then they also have to pay out on claims, and they're not getting any money to cover that. So I think this is a nightmare for these insurance companies and these financial companies. So that's what I see with that. Let me see what's coming down the pipeline real quick. Monday, we got earnings for, let's see, Equifax, Halliburton, and IBM. Their earnings are coming out Tuesday. We have Netflix and Chipotle, Chubb, Coca-Cola, Emerson, Lockheed Martin, Philip Morris, Texas Instruments, HCA Healthcare. And then on Wednesday, we got AT&T, Baker Hughes, Biogen, Delta Airlines, Kimberly-Clark, Next Era Energy, Thermo Fisher. Thursday, we got Capital One, Citrix, Eli Lilly, Intel, Old Dominion, Southwest Airlines, Union Pacific. And then Friday, we have American Express, Sanofi, and Verizon. So we got a couple of, let me see, we got American Express, we got Citi, we got Equifax. So we got some credit and some bank companies. Tuesday is going to be big for Netflix. So, pretty bullish on Netflix. However, we just never know because their earnings, they're, coin tosses. So we have to see how that plays out. But I think a lot of people are going to be watching Netflix. And that may be the answer to your question there, Dustin, about how the Qs are going to perform. I think Netflix is going to have a huge play in that. But I think they're going to probably do good. Chipotle is going to be interesting to see what we learn from that. Coca-Cola also. Texas Instruments is definitely going to be one to watch as well. And then we got some airline companies that's going to be reporting this week as well. I think that the news is terrible for them. But you got to remember, Wall Street is already expecting the news to be terrible. So being that the expectations is already terrible news, this is that time where bad news is good news or not so bad news is good news. So I think that the markets are going to be tricky, based off of that. You may see negative, earnings and things like that. But if it's not too bad, then they may rally, which is ridiculous. But the markets is trying to stay optimistic as much as possible. That's what the markets does, you know, despite, the truth or the reality. So, just got to do what you got to do. Gilead. Yeah, Gilead was a big boy for last week. It did pop through, it had like a 2-3 standard deviation move. Set a nice squeeze that's in there. And this is off of hopes. Again, this is not off of fundamentals, so it's tricky when you're trading off of hopes versus fundamentals. So try to let the fundamentals and the technicals to lead a decision. But some people get lucked up, and hit a home run that's out of here. It's got a squeeze play in there and everything, and it definitely popped up. Had a nice pop up right up here to the Fibonacci target. Its earnings coming up, but this is based off of hopes that they can, I guess, have some kind of vaccine for this COVID situation. It's going to take years for them to try to get a vaccine that's going to possibly even work. But this is hopes, and so we'll see. We'll see. Once it hits this kind of extension, it's kind of tricky. But the squeeze is there, but it doesn't mean it's going to pop further. Hit this target directly, so that's interesting. Normally, what you'll see is that it kind of trades sideways and it'll come down before it makes another leg up. Chart is nice though, but you gotta be careful when you're playing these like biotech stocks. They are very illiquid and they make crazy extreme moves, and you can easily get stuck in a trade, or you may try to get in and your order never get filled anyway. So don't text me or ask me, hey, why my order isn't getting filled? It's an illiquid stock. That's what happened with those. Okay. All right. So EMB, let's take a look there. Da, 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 da. All right, what do you guys want on this one here? Bullish setup on ENB, Enbridge. Don't know this company here, but we're gonna take the highest to the low just to get some levels here. Let's see what we got. All right, your 50 moving average is right up here, 31. You got about a $32 target that's up ahead. So for the immediate term, it's coming up bullish. Next leg up is here. So if you plan on getting in there, you can ride it up to about here and take targets from right there. That's what my move would be on that. I don't know too much about this company here though. I don't even know if it's a liquid stock or anything like that. Yeah, let's see what their options are looking like. Yeah, they don't even have a lot of activity over here. So yeah, it's for options, it's just a little tricky. Not a lot going on in here. Let me actually switch this over to my layout. Okay, we got some movements right here. We got some open interest right here at the $30 target, 32 target also. So this is where you can look at this as well, Dustin. When you take a look at it, you say you want to play it. It doesn't have a lot of activity on it, but it doesn't mean you can't make any money. But just pay attention to where your open interest is at, right? So the $30 target, that's 60 cents from where it's at now. You do have some more activity right up here, but that's not where the strength is at. So the 32.50, less probable, right? So the probability is very low. That's 18, probability. So that's really not probable on this stock here, and it only moves about $3. So anyway, just pay attention to that as well, because in the option statistics we get those insights that stock traders don't. All right, what else? So again, that's another situation where you have a chart and you see a chart that looks good, but the options don't look good. Scratch it. It's just gotta throw it out. What else we got? Gush, Juliet. Okay, SPY and Dow, everything down. What do you think? We just covered that, so you must be just jumping in about the SPY and the Dow. They are down right now. Puts. I'll take a look at Apple real quick. Again, this is with the NASDAQ and everything being overbought right now. Apple not moving past the 618 retracement. area here. As we can clearly see, it's overbought in this overbought territory. And so, we'll have to see how that plays out. Um, but it doesn't look like it's gonna come to it looks like it's gonna have to come down. It's overbought right now. So even Apple's overbought right now. Let's see. I take a look at the Russell because I didn't cover that, but the Russell is pretty weak. When we saw, the Nasdaq and everything else taking off pretty strong, the Russell really didn't make much movement here. The Russell's pretty steady though, but it's not really moving much, and it's in the overbought territory as well. But it really didn't make much of a movement here. So we got momentum to shifting downwards here. Also, it'll be interesting to see if this, comes down and then try to come back up. Don't really know. We'll be able to see how these play out, midweek though. But right now, it's overbought. So not too much that I like on the long side as of right now. I think last week was the moves. You should have got the plays that we had on Netflix and Amazon. Those were the moves for last week. Oil, they're supposed to have this victory situation going on with oil, with Russia finally coming on board, at least claiming, verbally that they're on board to cut oil production. There is belief that it's not going to be enough to stop these prices from falling. So that's another interesting situation because I remember watching this when we was coming off Game Plan Sunday. We was talking about it, and I believe it was right in this area here. And last week they had, Russia came to the table, but then the stock prices the prices kept coming down. So the future price kept coming down. And then we get this pop up, which again I think is a fake out move here. And you start to see it starting to descend now. So it's very volatile right now. As Ron said, yeah, that's right. The demand is still low because everybody's home, nobody's going anywhere. I think that what the oil markets is also trying to price in is that, Trump opens the economy back up, right? So if the economy opens back up, then maybe they can, get the prices to come back up because, the demand would be there. However, it's a very tricky situation because we have too much oil in the system and they don't have enough place to put the oil. So they're running out of storage capacity. So much. So, we had a squeeze play in here. We had a little fire dot that was, right off of this little move up here, but it really it's fizzing out. So it's really not a strong, confident move in here for me. So, but if this thing does play out, what you will see is a double bottom situation, right? And so keep in mind that this could, rally. That would be a double bottom situation. And we'll see if it starts to spin up, like those tornadoes we were talking about earlier, starts to spin up, then yeah, definitely that's your first target right here at the $32 target. And then we'll see higher zones up here in this range, right? So the $40. But I don't see it happening just yet. But that's the way that it can play out if that, has any positive moves there. All right. So with that being said, anybody else got anything else you want to take a look at? I think we pretty much covered everything. Yeah, let's see. Yeah, I think we pretty much covered everything that I had on file here. Yeah, I think the stock market is trying to be optimistic also about the COVID situation. They're spinning reports that the COVID is apex, and meaning that it's already peaked at its high, and that it should be coming down from here. Still all tricky. We don't know. I just think that the level of uncertainty is too high to be playing right now for the long. Definitely. And somebody was asking a question, and I don't know who it was, but it was asking a question if they should get in on Apple, buy the long stocks. I'm gonna go ahead and answer that just because they asked in advance, and I told them I was going to cover it. I don't know if they're here today or not, but they can catch the replay on this. And basically, what I wanted to get to is that if you're looking to buying stocks, holding for the long term, you got to understand what's the long term, projection. What is the long term projection? As we went back in time, showed you it takes 2 to 3 years for recessions to clear. That's what we see. It's not going to be a week. So yeah, we got a lot of people that's jumped in on this first little move into this bull trap. But you got to take a look at what we normally see every time in the past 2 to 3 years. the markets it come down. So there are going to be winners and there are going to be losers. It's not it's a it's not like a one size fit all thing. We were just talking about Amazon earlier, right? How consumers are switching their shopping patterns, they're shopping online. But Amazon is going to be one of the companies that's going to survive this situation just because they've been preparing for it for a long time. Amazon has Amazon Go stores. Y'all heard about the Amazon Go stores? So just to bring you up to turn to the times, China already has all this stuff in place in China, right? You spending cash in China, people be laughing at you, right? In certain places like Shenzhen, right? They already have cashierless stores. You walk in, pick up what you want, and walk out. Amazon got a couple of stores that they rolled out last year the same way. So Amazon is already they're already rolling out this stuff. They already in the grocery business now. They got Whole Foods and things like that. But I think that they have the capital, they can experiment, they can actually test where other companies wouldn't be able to do so. So companies like Amazon are going to be around. However, do you want to buy Amazon at the price that it is today? I think Amazon has more pain that it needs to feel before you jump in. Apple also the same kind of scenario. I think Apple's supposed to be or just released a new phone, or like a cheaper version of phones, whatever. And that's interesting because I think, from my understanding of the phone, is like $300-$400 is like a low value phone. But Samsung and Apple, they've been dropping $1,200 phones, $1,200-$1,300 phones like the ones I got here. you know. But with consumers being strapped like that, you can get deflation in the prices of these goods. That means they're not going to be able to, generate that cash flow that they once were. They've already maxed that capacity out. So they're going to be dropping cheaper phones. They're not going to be able to generate as much revenue. That means it's less revenue they're going to be able to pay to you as an investor for their dividends and stuff like that, right? So you got to pay attention to it that way. But just to show you guys a quick way that you can take a look at some of the fundamentals. And fundamentals, it takes a while to actually build a good fundamentals case here if you're building models and things like that. But if you go into your Thinkorswim platform, you can go straight to fundamentals here and type in Apple just to get a look here of what the analysts, current day analysts are saying on this thing here. So you have, a mixture of analysts. One of them is saying to reduce your holdings. That means sell. You have some that's saying buy. You got some that's saying buy. Then you have one that's saying neutral from avoid. So it was at avoid. Now they're neutral on it. And so, it's still an interesting thing. If you take a look at this chart here, that was this last high, and this is where you are today. Do you want to buy it at that price? Are you getting the fair price? How do you know the fair price? Well, you got to discount its future cash flows, and so you have to build models to see. This is the fundamental analysis about. How much money is Apple going to be able to generate? 5 years from now, and if we discount that to today, in terms of free cash flow, what does that look like? That's how that's how Warren Buffett, that's how the big dogs do it. It takes, again, it takes a lot of study, and it's a little more tedious. A lot of people really don't like learning fundamentals. I build financial models, and it is very, very tedious, and a lot of data most, people don't have access to. Costs a lot of money to get access to, the data that, these guys are using. Bloomberg terminals and things like these things are like $20,000-$30,000 a year. You know what I'm saying? So anyway, I think that we can see better pricing on all of these here in the future. So I think that, what I believe, and again, this is not, investment advice, but I think that, people should hold the horses and let this thing play out. Don't be in such a hurry. This is the first term. Long term, I believe that this is coming down further. So you're going to see moves. I believe we're going to see moves like this. And so just let it come down some more. Wait till we see better days and this thing starts to look better. When we start to see the S&P 500, the overall stock market looking better, then, I'll feel, more confident in that. And so right now it's just, it's a lot of craziness right now. It's too much uncertainty. So, I don't have a recommendation for that. So anyway, I hope that I answered that person's question. I can't remember who it was, but it'll be on the recording. You look for cash on hand, debt, and buy, sell strength. Yes, that's right. Thoughts on Apple? Okay, they sold 2 million worth of stock. Yeah. So I guess we answered your question on the YouTube side too. Yeah. And so just keep your eyes and ears to the streets. What's going on. We're dealing with a psychological warfare right now. We're dealing with all kind of warfare, but just understand your psychology. That's what this is all about. It's a psychology, mental matrix. And the Fed's pumping all this money in the markets to try to get you to spend money. So the stimulus check's supposed to stimulate the economy because when you spend money, somebody else makes that money. That's their income. The question is, what they got to test to see if people are going to spend this money. I think that with the level of fear that we have in the markets, that most people are probably going to save the money if they don't have to spend it. Now you're going to get people that's going to probably pay their rent and things like that, which we have record levels of people, over the past few weeks that haven't paid their mortgage, haven't paid their rents. Will they take that money and use it for that? Other than that, I think that people are going to, save it, and that they're going to have to, do more rounds to try to stimulate. And then we already got, some socialist policies already out right now. They're talking about giving people $2,000 a month to survive this thing. And that may be enough to get people back out trying to spend money. So we got to see how it's going to play out. All the economists are debating about it. Nobody knows. We got to see how this is going to play out. So with that being said, I'll go ahead and bring the session to a close, man. I'll catch you guys in the markets this week. Peace.